The glut of completed single-family homes for sale has spiked to levels we haven't seen since 2007. Prices are dropping, but let me tell you, they're still way too high. Builders are slashing prices, piling on these awesome incentives, but yet affordability remains out of reach for many buyers. It's just not enough. So what does this mean for buyers and sellers and for the market? Bottom line is, we're seeing cracks in the housing market, but the high prices are keeping many buyers on the sidelines. Buyers and sellers out there, listen, it's time to rethink your strategy. This isn't just about price cuts, it's about surviving in a fast-moving real estate environment. It's changing every day. That's why you need to come back to this channel to hear more, because I'm not just breaking it down. I'm going to tell you what I would do as a real estate consultant and also invest myself in this market. So let's talk about what is happening right now in the market, okay? And I like to look at numbers. I'm a numbers girl. They paint a clear picture of where we're headed, okay? As of November, unsold inventory of completed new construction houses surged by 57% year over year. Take a look at this graph I'm showing you here. It's reaching a staggering 124,000 units. That's the highest level we've seen since the depths of the 2009 housing crash. That's just really not just a little blip. It's like a massive red flag for the market. So I thought that was something we definitely should talk about. And it's not just completed homes, the total inventory across all the stages of construction. So if we look at this graph, this talks about all houses that are also under construction as well. This means whether the foundation hasn't been poured yet or the house isn't move-in ready. It's about 493,000 units. That is an 8.1% increase from last year and the most we've ever seen since December 2007, right before the last major downturn. So what does that mean? So now we have 9.1 months of supply in the market for new construction. Now this number is for new construction all over the United States. I know here in Philly and the burbs, we don't have much new construction in our immediate area, but out further you go away from the city, that's where they're building these houses. So if we have 9.1 months of supply, where a balanced market typically sits around 4 to 6 months of supply. So it's a little bit out of whack here. And why that matters is that builders are in a race really against time. They're not just slashing prices, they're just throwing all these incentives. I mean, really, really cool incentives you can get right now. And from the costly mortgage rate buy downs, and there's a ton of things they're throwing at buyers. But even with these discounts, affordability is still a huge problem for home buyers. And I know in my area, these homes are just so far out that buyers don't want to live out there. I mean, like an hour or two from the city. Now, the median price for a new single-family home dropped to $402,600. Check out this graph in November. Check out this graph. The lowest it's been since September 2021. Sounds good, right? But really, you can't be fooled because these prices are still significantly higher than pre-pandemic levels. And when you factor in that today's higher mortgage rates, the monthly payments are out of reach for a lot of buyers. So I call it the affordability squeeze. I think is the key reason why demand isn't bouncing back as quickly as you might expect. So Diane, what are you talking about? What is going on here? What does this mean? I see buyers feeling the pressure. I hear it every day. They're feeling this pressure. And if these trends continue, we're looking at a market correction that could change the whole landscape for buyers and for sellers. Stick with me. This is just the beginning. Next, I want to talk about a builder called Lennar. I have this article here. They're one of the biggest players in home building right now. And there's some drastic steps they're taking to stay afloat in this shifting market. Their revenues from home sales, it dropped 9.2%, driven by a combination of fewer homes being delivered and a dip in average sales price. Take a look at this graph. Now this dip, this is a clear sign that demand isn't where it needs to be. The numbers don't lie. The average sales price of the Lennar homes has fallen to $430,000, down from $491,000 just 2 years ago. So check out this graph. Total decrease. I don't think it's stopping there. They're projecting even lower prices in the coming months, around $410,000 to $415,000. That's a 16% drop from the 2022 peak, marking one of the steepest declines in recent memory. So why are they doing this? Why is Lennar doing this? Like all the other builders, they just can't afford to sit and let unsold homes just sit on the market. They don't have the luxury of waiting. They need to move their inventory fast to free up capital and keep their businesses running. So they're offering these great price cuts, and these incentives and mortgage rate buy downs like I talked about. But the kicker is, even with all those efforts, like I said, buyers are still hesitant. So how do we get buyers out there? I think it's a balancing act. You know, the builders are trying to reignite demand without completely gutting their profit margins. But with fewer buyers in the market and affordability is all-time low, they're finding it harder and harder to keep up. So let's talk about it maybe from the buyer's perspective. Let me see. Let's talk about affordability challenge. I hear it every day. I can't afford it. I can't afford it. I can't afford it. So because the builders are pulling out all these stops to lure buyers back into the mortgage, they're giving away free upgrades. Like I said, they're doing the mortgage rate buy downs, stainless steel appliances, premium flooring or quartz countertops. They're doing price cuts. It looks great on paper, but it often still leaves buyers stretched thin when it comes to monthly payments. So buyers are just looking at the monthly payment. So the reality check is, like, even with the perks, buyers are saying, I really still can't do it. They're not willing to take the risk. Now, interest rates are hovering at 7%, a massive impact on what buyers can afford. If you have this $400,000 home, at today's rates, costs around $2,800 a month just for principal and interest. Compare that to just $2,100 a month at a 4% rate a few years ago. That's an extra $700 a month. And over the life of the loan, that's thousands, right? So that's where we're keeping buyers on the sidelines. Higher payments, they're causing buyers just to rethink. I see buyers just sitting it down and rethinking. In many cases, they're just holding off entirely. So I think it's more about confidence, not just affordability. They think that in their minds, they want the market to stabilize, hoping for better rates and these same lower prices, or a combination of both. But I don't know when they're going to see all that or when that's all going to happen. And are buyers willing to just sit and not take action when they really need a house? So how do these new construction homes, or new builds, or what we're going to call it, compete with, say, existing homes? In some areas, it's becoming a problem, especially further out here away from the city. The new homes are directly competing with existing homes. Huge, because people want this newer stuff. New builds have carried a premium of 10 to 30% over existing home prices. But that gap now is starting to shrink. So as these builders, like I said, are pulling out all the stops, incentives, buy downs, closing cost credits, premium upgrades, throwing it all in there, these perks make the monthly payments on new homes much more competitive than we've seen in years, and they therefore are competing with the existing homes now. And meanwhile, the existing home sales have, I wouldn't say plunged, but they have gone down to the lowest level since 1995. Take a look at this graph. Now, remember that they're not buying. Sales aren't happening because buyers aren't buying. It's not because their houses aren't selling, because there's less people out there to buy, and there's less homes to sell. So home sellers are stuck. They're stuck in the past. They're really clinging to these pre-pandemic price expectations, as I call it. How I see it is, home sellers, when I go down to sit with them, they just refuse to adjust to the reality of today's affordability constraints. And as a result, their homes are either sitting unsold or they're not even going to the market at all. And that makes our inventory much lower. So a big question for buyers today is, do you pay slightly more for a newer home with modern features and builder perks, or stick with an existing home that may need updates but could be in better location? So I know I have Annette and Dan, they were thinking of that, and they did end up moving out, like an hour and a half out. They wanted better, more updated things in their home. And I think for most buyers, they're favoring towards new construction, basically because of all these great incentives. I think it's a big change in how the market's going to operate if this continues. So what happens if you're a seller? You want to sell, you're thinking about selling, and you think, wow, this market's stacked against me. Well, I don't think it is, especially in Philly and the burbs. These houses are still selling pretty quickly. So in Philadelphia proper, like Northeast Philadelphia, I was at a house today. There's a lot of twins and row homes going on the market and on the market. But actually in the suburbs, you don't have that. So it depends on where you live. So if you're in an area where you're competing with other sellers, and then you're also up against home builders, that's tough for you, because you can't match those incentives. That's why staging your home correctly is important, and then pricing it right off the market, out of the gate, and maybe offering. Go out and for $600, take out your washer and dryer that's old and dingy and put a new one. People love that. Like giving buyers some perks for your homes that are not new construction. Because if you overprice your home and you have nothing modern in it and you haven't done any staging, you're just going to sit unsold for tons of months, month, over and over again. So, like I said, you've got pricing and then you have presentation. The buyers are comparing your home to a brand new build, which means your property needs to look just as good or better. That's why I wrote my book called Model Home Mindset, and talks about getting your home looking like a model home without spending a lot of money, like decluttering and painting and staging, and make your small but impactful updates like these fresh paint like I talked about and updated fixtures and hardware. Make it worth the while and make it feel good, or how your home is perceived with the buyers. That's why I tell you to get a pre-home inspection so people feel like it's been inspected already. Now this is only if you're serious about selling quickly. You know, you can offer closing cost credits, some home warranties, or a small rate buy down. Could be the thing that makes a buyer choose your home over another. It's a lot of things we can do. So you give me a call, and if you need a realtor in your area, go down below. There's a link there, and we can send you somebody who has some creative ideas like we do. So you need to stand out, basically, okay? And for buyers, you know, this market's really filled with opportunities. You have to think of it that way. You need a strategy for sure. Builders are under a ton of pressure to move their inventory, and that puts you in the negotiating seat, okay? And if you need us to help you negotiate on new construction, we can do it for you. So they're offering incentives, but you know, push for more and get as much as you can. More upgrades, or builder, maybe bigger closing cost credits, or a deeper price cut. So new builds, I think it's worth considering. So get those incentives, get those mortgage buy downs, get anything you can get from these builders if you're willing to move out to an area that is further away, like in our area. Or maybe where you live, there's new builds everywhere, like I said earlier. So, but just don't rush into either. Okay, make sure you have a good realtor. We can find you one if you need one. So if prices do continue to drop in the coming months, which I don't know if it will continue, you can wait to see, and maybe that's your play. But just try to time the market. You know, it's a risky game. That's why you have a realtor to help you. Focus on finding a home that fits your budget, meets your needs, take advantage of every opportunity you can. It's a real rare market to get these new builds because usually they're so much higher. So as I was telling you, I was going to give you my take as a real estate consultant. I think this is a market influx. And how you navigate it, I can say, is it will determine your success. Builders are feeling the heat to clear out the inventory, but they're still holding back on the kind of price cuts that would truly reset the market. So if I were advising them, I'd recommend taking a more aggressive approach to pricing now rather than bleeding out through these constant incentives that erode profit margins over time. And for buyers, this is time to get bold and strategic. Work with an agent, like I said, who knows the builder game inside and out. I've been doing new builds since I was 5. Come see me, I can help you. Don't be afraid to push for everything you can get. This isn't a market for passive negotiating. This is a market where the boldest buyers get the best deals. And for your sellers, message is simple. Get real about pricing and presentation. The days of overpricing and doing nothing and hoping for the best, they're gone. You need to price competitively, make your home as appealing as possible, and consider offering incentives if needed. It's not an easy market, but if you got the right moves, you can still come out on the top, okay? So if you're a buyer or you're a seller, just stay informed and be adaptable in playing the long game. This market really isn't for the faint of heart, but if you know how to navigate it, there's opportunities on both sides. The housing market, 2025, is already shifting so fast, just like AI. And whether you're buying or selling or just watching from the sidelines, staying informed is crucial. That's why you're on this channel, getting the fair and balanced, getting the no fluff advice from me. And if this video is giving you value, please like and subscribe, hit that notification bell. This is the real deal in real estate, and I'll see you next time with more straight talk and no fluff. Stay sharp out there.